Thanks so much, Olajide.
Okay, Professor, were you expecting the Monetary Policy Committee to tighten its stance?
Yes, that was more like the market consensus. Every one expected tightening on the part of the MPC. But what came to me as a surprise was the magnitude of the tightening. For me, it was an overdose. It can be likened to a patient who is treating an ailment. Your patient is expected to take one pill a day, for, 3 times a day. And then the patient decides to take all of those, at once. So that's the way, I would liken it. Not only to increase MPR by as much as 400 basis points, unprecedented, from 18.75 to 22.75, but they also went ahead to jack up the cash reserve requirements, to as high as 45%. So for me, I think it is not one measure that will, help support growth, in any way, even though the target really is inflation.
Okay, while the decision may be important to curb inflation, don't you think this may further increase cost of borrowing amidst rising cost of living?
Absolutely, you can say that again. See, that's why I said it's an overdose. It's going to increase the cost of funds, cost of capital for firms. It's also going to reduce access to credit, especially now that the government is even trying to, put in place measures to improve the welfare of Nigerians. The president is talking about consumer credit. The president is talking about student loan. And in this kind of, environment, you are also, the MPC seem to be increasing rates. So for me, that will be, countering some of these, or trying to roll back, some of these initiatives by the, by the fiscal side. So there is need to really coordinate what the fiscal and the monetary, sides are doing. Let me also say this: if you look at that communique, the major reasons driving inflation, were even mentioned there. 4 of them were mentioned in that communique. The first one has to do with security challenges, especially in the food, producing areas of Nigeria. The second, point mentioned there was high fiscal deficit, again on the part of the government, and then rising cost of energy. The fourth one has to do with exchange rate pass-through. Now, if you look at these 4, 3 of them are outside the control of the central bank. So why does the central bank think it can target inflation or force down inflation by, the kind of decision, that they took today, considering the fact that 3 of them are outside, the control of the central bank? So I was expecting tightening, as I said earlier on, but not by as much as they have done. Remember, they're also meeting next month. What stopped them from, maybe increasing by, say, 200 basis points, max, and then watching to see what happens until March. What's the situation at present now will distort a lot of things, in the economy, and that's not, in my view, that's not, quite helpful.
Okay, Prof, just before I let you go, looking at the foreign exchange market, it has witnessed a lot of pressure recently, but CBN said it has settled $400 million worth of verified claims to reduce backlog. How do you assess the CBN's efforts to stabilize the foreign exchange market so far?
Yes, again, that's also why I thought they should have been a little more moderate in what they did today, decision they took today, because of the actions they have also taken in the area of the forex market. I think they have taken some right steps in the area of stabilizing the value of the naira, international value of the naira, and also bringing down the exchange rate. Whether it is the issue of removing the limits or margins that IMTOs get, or particularly the recent one, all right, the recent one that has to do with the broad, regulations, so guidelines for operations of bureau de change. So that has had the effect of, reducing or calming the market and reducing speculative activity in the market. So I think they should continue in that direction, okay, while also using other tools to mop up liquidity in the system. It doesn't have to be the monetary policy rate. Monetary policy rate is not the only tool that's at the disposal of the central bank to deal with inflation, because it has, as I said earlier on, it has a lot of distortionary impact in an economy if not rightly used.
All right, many thanks, Professor Uwaleke, Director, Institute of Capital Market Studies at the Nasarawa State University, Kefi, for your thoughts on the network news.
Thanks so much.